What's going on, guys? Today we are going to talk about Alibaba stock. It's one of my largest holdings right now. If you didn't check out my pre-earnings video, I have a pre-earnings video up for Alibaba stock. But in this video, we're going to go over post-earnings. We're going to take a look at basically some of the metrics that Alibaba missed on, which specifically the biggest concern looks like it's revenue right now. But we're going to go over that, go over kind of why I still think I'm kind of bullish on the stock. I think there's a lot of positives for it and a lot of good things that were actually mentioned during the conference call, and we're going to get into those in this video. So if you enjoyed the video, make sure you drop a like down below, and if you want to see more videos like this one, make sure you hit that sub button. So real quick, let's take a look at Alibaba Chart. So into earnings, the stock basically just ran down, and obviously the week was relatively hard. There's a lot of negative news around the market right now with everything happening in Ukraine. So the stock market was hit overall, and obviously Alibaba was no exception. So you saw everything run down pre-earnings. You see this huge kind of dip in here, and then everything kind of just leveling off again as the market kind of levels off. So I think a lot of that has to do with how the markets kind of reacted. I don't think there's a whole lot of reaction in there from actual earnings. One really quick thing, if you actually go onto Google and look up Alibaba financials and you scroll down to where their earnings are and you look at the last kind of 3 quarters, you think that Alibaba is missing their earnings by almost 90% just looking at these numbers. But when you look into the numbers, you see that their expected is almost $16 and their reported is $2. If you go into USD to Chinese yen calculator, basically what it looks like is they're actually putting Chinese yen is what's expected and USD is what's reported. And then this is just basically calculating, right, the difference between the two. So it's looking like they're down 90% on their earnings, which I'll jump over here real quick because I've actually done the math, So if you look and you put $2.65, which is what they actually reported this quarter in USD, it comes out to $16 and 74 cents. So Chinese yen, sorry. So basically, right, this is kind of just messed up, and it actually gives the wrong perception. It's a very negative perception if you just look it up. So you need to take that into consideration, make sure you know kind of what you're looking at. So one thing that's always interesting to look at is basically the news after earnings. So you could see that actually most of these news reports are very negative. So Alibaba cheap, but not a bargain. Alibaba slowest revenue growth since going public as competition bites. Another one, there's another couple down here, basically slowest revenue growth, also slowest revenue growth since going public. So a lot of these headlines are very focused on basically the revenue growth. If you click on a lot of these articles, they go into basically the revenue growth. So that's what we're going to primarily focus on in this video, is basically what happened to revenue and kind of what's going on there. So, but it's always interesting to look at these, see if there's a lot of positive feedback, see if there's a lot of negative feedback. Right now, there's a lot of negative kind of connotation to the market, so I expect all these to be very negative. And then Alibaba, is no different, especially with Russia being closely associated with China. And Russia being in war, kind of what are the Chinese going to do is always kind of a question there. So a lot of negativity in the market right now, just with everything going on. All right, so I chose this article because it's very straight to the point. I almost highlighted the entire article because there's a lot of good kind of key notes in here, but let's go over them kind of one by one and talk about my opinion on them. So Alibaba stock falls as quarterly revenue growth stalls. A nice little rhyme in there to get the article started. But overall, the stock had earnings of $2.65 per share and revenue growth of 38.06 billion. Analysts actually expected earnings of $2.55, while revenue growth of 38.9 billion. So they actually beat on earnings per share, but slightly missed on their revenue growth, overall revenue. The problem is what I have highlighted in red here. This is kind of what everyone's concerned about and what we just talked about with all the news articles being written about this topic here. So revenue climbed 10% from a year ago period. It's the slowest growth rate since the company became public in 2014. So this is huge, and let's actually jump over and look at this metric a little more in depth, because I think people are kind of blowing this out of proportion. So here we're looking at revenue growth basically of Alibaba over its time in the market. So you can go actually all the way back to 2014 when it became a public company and look at its kind of revenue growth quarter over quarter, which is kind of weird to me because in 2000, basically 2 quarters ago or 2 years ago, on this quarter, they actually only showed a growth of 6.45%. So I'm kind of not sure where they're getting the number of 10% being the slowest growth, but it's interesting. And then on top of that, you're also seeing, so here they're actually increasing their year over year quarter growth. So from that 2020 date where they actually had kind of their lowest growth to 2021, the same quarter of 2021, basically they had 100% growth. And again, you can look at the actual numbers quarter over quarter. So in March of 2020, they actually posted a growth of they had a revenue of $15.4 billion in that quarter. Then if you fast forward to 2021, March of 2021, you actually have a revenue of $30.99 billion. So if we look at that now compared to March of 2022, you're seeing $30.8 billion is what we just kind of looked at in the article, right? So $30.8 billion. So really what's happened is, again, you have basically a doubling up here. So basically had a terrible quarter here. So obviously in 2020, early 2020. So in 2021, you had an amazing looking quarter. And then in 2022, basically the company has still grown on top of that amazing quarter. So they went from doubling, right, to what I would actually say, again, going from 30.9 billion to 38 billion is really actually more like a 25% increase in revenue on the quarter. So I'm not, again, really sure where they're getting their numbers from, but it's very interesting kind of to look at this graph and see that, right, they had a poor quarter, they obviously had a huge beat and have seen continued growth, and then are still having that growth even on top of a lot of these really high quarters that you're seeing here where they've just had very great growth. So a lot of these companies that you're seeing in the market, if they're US based, they're having actually a tough time beating their 2020 and 2021 numbers because of how much growth the market saw during that time period. And that's what's resulted in a lot of these kind of tech growth companies actually falling over the last kind of 6 months. So it's very kind of weird to me that, right, an Alibaba that just has a negative stigma around it is actually continuing to grow and it's not falling, but it's seen in a negative light just because its growth has kind of fallen off a little bit, and it's not even a significant amount. I mean, you're seeing 10%, that's still double digit growth, and that's for 1 quarter. I mean, the real question is, right, how is it going to compare over the year? Is it going to kind of keep growing over the year? Because, right, you see kind of a continued growth on this front over the total kind of trailing 12 months. That's just continuing to grow quarter over quarter. So really, I don't think it's as big of a concern, at least to me, as it should be, and as people are kind of making it out to be. So one key thing that Apple does is they repurchase their shares, especially when the stock is very low. That is huge because basically your earnings per share, right, as they pull shares off the market, your earnings are naturally going to go up per share. And Alibaba is no different. So their CFO has came out and basically said this. So our current share price does not fairly reflect the value of the company. At current price levels, we plan to continue our share repurchases. At the same time, we will maintain a strong cash position that gives us the financial flexibility for future investments. So basically, during December, the December quarter, Alibaba repurchased approximately $10.1 million of its American depository receipts for $1.4 billion. So that is key. Basically, they're actually repurchasing American shares. So Alibaba as a company is actually going to write their offshore kind of Cayman account, the account that they have to set up to actually be able to post to the New York Stock Exchange, and they're repurchasing shares of that company. So that is huge because, right, that's showing kind of Alibaba has faith that they're not going to get delisted, right? Because if they got delisted from the New York Stock Exchange, then their company is going to be devalued. So why would they purchase their own shares at an inflated price if it's going to be basically devalued? So that is huge for me and something that's not very talked about is that basically Alibaba does execute on repurchasing shares, and overall that's going to positively affect the business. And then the last thing that is actually going to have the biggest impact on the business, it's right, how is the business actually performing? And like we talked about with PayPal and some of my other videos, the biggest metric you can look at for a company that is growing is how many users are they adding, right? Because the more users that you have, the more people who are engaging with the platform, likely they're spending more money. They're basically, right, referring it to their friends. It's becoming more kind of, has a larger and larger reach, which allows it to capitalize and make larger and larger amounts of money. So right here, the company has added 43 million active customers during the quarter, reaching 1.28 billion users, and a revenue from its cloud-based segment basically grew 20% to 3.07 billion. So cloud is something huge. They haven't been a huge player. They're kind of in the top like 3, 4, 5 spots. Obviously, you have Google, Microsoft, and some of these other guys who are kind of a little bit higher than them. But for China, right, they're one of the biggest players, and continue to be the biggest player. But the biggest part in here is, right, they've added 43 million active users. So that is huge. Those are more users that are going to add more money to their revenue, add more money to their earnings per share, everything. So that is massive, and overall is going to have a huge impact in the company. So overall, I still like Alibaba stock. I think there's a lot of things kind of going forward to it. I think there's a lot of negative market sentiment just right now, and I think that's really what drove the price down this last week. I am kind of actually thinking about buying a little bit more, adding a little bit more into my position, average down a little bit more, because I think kind of as stocks and everything rebound, I think Alibaba will naturally kind of benefit from that, especially when people kind of look at earnings reports like this and ones into the future and see that the numbers and revenue and everything are still trending in the right direction. So overall, I still like the stock. As always though, make your own kind of decisions, evaluate stocks, kind of think through whether you like their business models, whether you're comfortable with the risks and the upside that you're kind of looking at with the stock, and kind of make your own decision whether you want to be in the stock or not. Otherwise, I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. Thanks for watching, guys. And as always, have a wonderful rest of your day.